This is 95.3 Business Now.
Wednesday, the 7th of February. I am Aramide Falorunshaw. This is how we welcome you to the program. So let's get started. Nigeria broke new ground in the global mining industry by securing the chairmanship of the newest mining pressure group, the Africa Mineral Strategy Group. The Nigerian Minister of Solid Minerals Development, Dele Alake, was unanimously elected the pioneer chairman of the Africa Mineral Strategy Group during the opening of the African Mining Indaba in Cape Town, South Africa. And speaking at the signing of the resolution, Alake asked African leaders to forge a common front in order to get maximum benefits from the mineral resources on the continent. The Economic and Financial Crimes Commission has arrested Abubakar Ahmad Sirika, a brother of Hadi Sirika, the immediate past Minister of Aviation, over an alleged contract fraud in the aviation ministry. The former aviation minister Hadi Sirika faced allegations including conspiracy, abuse of office, diversion of public funds, contract inflation, criminal breach of trust, and money laundering, totaling during his tenure in office. EFCC says the 8.069 billion naira in question is related to 4 aviation contracts awarded by the former minister to a company called Engineers Nigeria Limited, which is owned by the minister's younger brother Abubakar Sirika. The chairman of Senate Committee on Capital Markets and Institutions, Osita Izunaso, has reaffirmed the commitment of the Nigerian Senate in driving legislative reforms that will propel the capital market to new heights. Speaking at his visit to the Nigerian Exchange on Tuesday, Izunaso emphasized the important role of the capital market in fostering economic prosperity. He asked the stakeholders to work together towards achieving common objectives. And Sergio Pimenta, the regional vice president for Africa for the International Finance Corporation, says IFC's investment in Nigeria is valued at $2 billion and spread across different sectors, making it the second largest investment portfolio in Africa. In his keynote address at a conference, Pimenta further revealed that the $2 billion IFC's investment portfolio in Nigeria is focused on trade finance, manufacturing, financial markets, and infrastructure. So we'll go on a break now, and when we return, we'll look at the world's leading rating agency. Moody says CBN's new foreign currency regulations will hurt banks' profitability in the short term. More on that after the break.
This is 95.3 Business Now.
Welcome back, everyone. Global ratings agency Moody's Investors Service says the new foreign currency regulations of the Nigerian Central Bank will weigh on banks' profitability in the short term. This follows the CBN's notice announcing an amendment to prudential requirements that eliminated commercial banks' foreign currency long net open position effective February 1st. Joshua Debisi is a financial services research analyst at Rand Merchant Bank, and he joins me now for more on this latest Moody's comments on the CBN's new foreign currency regulation. Good morning. It's great having you on the line, sir.
Yes, good morning. Thank you.
So, to begin with, do you agree with Moody's conclusions on the expected impact of CBN's new FX rules on commercial banks?
Well, yeah, to a certain extent, because obviously the fact that the banks have a much lower net open position means that they're going to obviously gain significantly less from their foreign currency holdings, and so FX revaluation gains will probably be moderated fairly significantly, at least on their books. So yeah, to a large extent, Moody's is quite correct on that front.
But how tough do you think 2024 would be for banks as the CBN continues to tweak its policies on the FX market, on liquidity, and so on?
Okay, so I think that I don't expect it to be tough. Definitely, we'll just not see a repeat of the outrageous non-interest revenue that we saw last year. However, we have to remember that the banks made significant interest income last year because interest rates are high, and the chances are that the CBN is probably, or the Monetary Policy Committee is probably going to raise interest rates further. So chances are that, yes, there will be a bit of a hit to non-interest revenue, but core banking will still carry them through. And I don't think that it will be like all doom and gloom, effectively.
So now, how should banks navigate the new CBN regime of monetary tightening and its implication on their capital adequacy ratio, the liquidity and profitability?
Well, I think, first of all, I don't think it will have that much of an impact, especially on capital adequacy, because obviously the CBN outlined in that circular the fact that the banks were quite heavily exposed to volatility risk of foreign currency. So by moderating or effectively removing the net open positions, they are less exposed on that front. And so probably that's a positive for them. But in terms of the other metrics, I'd say that generally the banks have been through a lot of systemic shocks over the years, most recently the COVID-19 pandemic, and they have built up a lot of experience and they are much more resilient as a result. So I don't expect that it would have too much of a negative impact long term.
All right, Joshua Debisi, Financial Services Research Analyst at Rand Merchant Bank. Thank you so much for your insights this morning. Do have a great day ahead, sir.
Thank you.
So let's quickly give you a brief of Tuesday's trading day. We're starting with the equities. The bears continue to dominate the Nigerian equities market as investors sold off stocks in Guinness, 9.73% in the red. Oando also dipped 8.33%. We've got Boa Cement, a whooping 10% decline. Access score 1.92% and Jitco 1.48%. As a result, the NGX all share index closed lower by 1.50% or 150 basis points. So across frontier African markets, the Egyptian exchange in Cairo reversed Monday's gain with a 1.43% decline, while the Kenya Bourse was slightly better by 0.04% on Tuesday. And here in West Africa, the regional exchange of BRVM in Abidjan lost 0.10%, while the Ghana stock market remained flat. And looking into Southern Africa, the Zimbabwe Stock Exchange bounced back by 1.12%, and the JSE in South Africa saw an uptick of 0.71% at the close of trading. So overnight lending rates in Nigeria increased by 590 basis points to 17.0%. That's following the inflows from the open market operation maturities of 25 billion naira. And a look at fixed income activities in the Treasury bills secondary market were bearish. The average yield expanded by 206 basis points to 11.9%. Well, similarly, the Treasury bond secondary market was negative, with average yield expanding by 3 basis points, closing at 15.3%. And let's look at foreign exchange right now. We've got the Naira that depreciated by 1.0% to 1,433 naira 89 kobo against the US dollar at the Nigerian Autonomous Foreign Exchange Market, and that's according to FMDQ Securities Exchange. Well, that's your business now for today, Wednesday, the 7th of February. Hope you enjoyed it. I am Aramide Florenshaw. Do have a great day ahead, everyone. It's bye for now.
This is 95.3 Business Now.